Hello. Hello, everyone. Hello. Hello. Yeah, let me everyone. Yes, this is Charlie Tian, the founder and CEO of Guru Focus, and very glad to see you again here. And as always, you can ask questions in the YouTube streaming channel, and I will answer your questions whenever I get to the chance. And yes, sure, let me know where you are. And I always love to hear from you. And I'm based in Plano, Texas. And actually, the weather is getting much better. It was raining, it was lightning, and yeah, let me know what you want to know about Guru Focus, the website, how to use it, or any questions related to investing. I will do my best to answer it. Yes, glad to see you again, Warren. Haven't seen you for a while, I believe. Warren, Clark, and Michael. Yeah, and Adam from Frisco. Wow, from Frisco. Okay. Central Cloud Investor. Okay, hi, nice to meet you. And Sevilla, a very good name, and glad to see you again. And Amit and Chris. Okay, that's great. And Michael's from Slovakia. Okay, feel free to ask me any questions, and I'll be glad to share with you. Know that the market has not been very smooth, although it was getting better. It has been getting better since last week, and lots of volatilities. Let's review the market valuation, like I always do, and then I'll go to the things that that's important to us. Okay, let me share my screen with you here. Yes, this is my screen, and this is the homepage of Guru Focus. What you see on your homepage, might be different from what I see because this page is fully customizable. And what I love to see is this SP500F value chart. And if you look at this chart, you can always expand it. I think this chart is great. I have looked at many charts regarding to the market valuation, but I think this chart, the one we developed, is the best. I really believe so. And we know that the market was overvalued about at the beginning of the year. Then it had a crash. It went almost to the bear market. During that time, the market was down close to 20%, SP 500. And it was about fair value, but now it recovered another 10%. So it's not as undervalued or fair valued as anymore. It's slightly overvalued. And I believe this strongly. And I think that the market is a little bit overvalued. It was fair valued maybe 2 weeks ago, but now it's slightly overvalued. And yeah, and how about the insiders? The insider trend always correlated with the market valuation. And we have found historically that when the insider are buying as a whole, and it's always a good time to buy. So that's why we created this insider trend page. Somehow it's loading a little bit slow. Oh yeah, up. It's under insiders. It's under insiders, insider trends here. And here it shows you what the insiders are doing with their stock. And this is again the SP 500 versus the insider buy sell. You can see the green bars here are the insider buying to selling ratio, buy to sell ratio. So when the green bar is high, there are lots of insider buying activities. And this black horizontal line is the average. Historical average, the buy to sell activity is about 0.4 historical average. This red line is the volume, is the average volume of insider trading, and this blue line is SP 500. You can see that when SP 500 has a dip, has like a downturn, maybe 20-30%, the insider would be buying like crazy. And they always know as a whole, as a group, they know when to buy. This is like in 2008, 2009, the financial crisis. This was 2012, U.S. government shutdown. And in 2020, the pandemic, the market was down like 30% within 2 weeks. The insider, they grabbed this opportunity, and they immediately bought a lot, and the market has been doing very well since. And the most recent, when we had a market downturn close to bear market, you can see that the insider activity was picking up here, and the average is about 0.4, and it went to above average. It has long been below average, but it went to above average last 2 months, and now about 0.5. So the insider thinks that it's not a bad time to buy. It's a pretty good time. Pretty good time. Yeah, let me know if you have any questions regarding to this, and I will certainly do my best to answer your question. The insider chart, every bar here. Thank you, Adam, for the question. Every bar here in the chart is the monthly data, is a accumulated data for that month. So we add all the insider buy counts, divide by all the selling counts. And every bar here is a monthly data. It's for that month. So latest data is for May, but since May is just starting, so every day we got new data, it will be added to the calculation. So the bar for the last month will be, the current month will always be changing until the month end. And it's the number of buying, selling activity in the public market. We don't count the option exercises or private market deals. It's in the public market trading at the public traded prices, as the current stock prices. So that's more convincing. And we also, when we count this, we don't really care how many shares they buy. We just count them as one if they buy today. And that's why we call it transaction count here. And we have users suggested us to track the shares bought instead of just the transaction count. We actually just added this option this month called shares volume option. You can switch on that, click on that, switch it. It's actually not very, if you look at this chart, it's actually not as good as the one we're using as a buy-sell count ratio. It's actually not as good as the one we have been using. So you can always switch this and go back. Of course, you can also look at the sell-buy ratio, where we're displaying buy-sell ratio. You can also look at the sell-buy ratio. If you click on that, you will know that when the insiders are selling as a group, selling more as a group. Since this is 2007, they were selling more during the financial crisis. They didn't sell at all. They don't sell during when market crashed. They don't sell like during the market shutdown or Ebola crisis, I believe here. And also during the pandemic, 2020, this particular month, they don't sell. The insiders, they know when to buy as a group. They know when to buy and when to sell. We did lots of studies on this. We found that as individual insider or individual companies insider, not very convincing. But as a group, they are very they reflect the true trend for the insiders. They show us when is a good time to buy, when is a good time to sell. Okay, let me look at the questions. I think I have answered Adam's question. And how about Anthony? gold price will continue to increase given the behavior of President Trump to control U.S. spending. Is it good value or any gold company or some royalty stream groups? Okay, wait, I did find, I think I thought about gold a lot. I started to buy gold since last year, which I never bought before. And I'm more worried about the U.S. government debt. The debt, U.S. government debt is just so high. Now the interest payment is close to 20% of the U.S. government income. That's alarming. Just last weekend, Warren Buffett said that this is not sustainable, and we all know it's not sustainable. And the U.S. government debt is not sustainable. And how long it will last, we don't know. When it will explode, we don't know. So that's why I bought some gold. It's an insurance to my portfolio. And I think if you want to look for gold mining companies, we do. I think our screener will work very well for that purpose. If you just come to our all-in-one screener and you want to find a gold company, so I think if I just do gold mine here, gold mining. If I just search here, let me see if I can find the gold mining companies. Maybe I didn't. Maybe I should just. Maybe I just type gold here. Yeah, here you'll find a lot of companies with gold mining. Yeah, you'll find the companies with gold related to gold mining. If now among these companies you want to invest in those with high profitability rank, with good financial strength, and with good quality rank. I think I display all of those, and then maybe you can filter it. For instance, you want to invest those in good quality mining companies, because gold companies are usually gold as an industry is a very cyclical company industry, and you want to invest in those that has higher quality among than the others, and because we don't know the downturn when the downturn will be, and you want to invest in the ones that have good financial strength to make sure that it can sustain the downward cycle. And if I put all this together to look at the GF score, I think it's a pretty good measure of the quality and the investment, the quality and valuation of the stock. You can see that some that we can recognize, like Royal Gold, Goldfield, Southern Copper. This seems to be a copper company, and I think you want to start from these companies, the ones that has higher rank, with financial strength, with profitability, with the overall quality rank. You want to stay with those. Okay, let me. Seems like we have lots of questions. North is asking, where can I find EPS beat or miss per quarter compare the guidance analyst expectations? You want to screen for those, I believe. Let me see what we have here. We just analyst. So you want to find that beat. You want to find that beat or for every stock, for example, we have a page. It's called forecast, where you can see that if the earning has beat the estimate or not. You can see that this chart here is called surprise reported history overview. Here, the green circle will indicate that it beats the revenue. This is the revenue but overall cash flow per share is missed. So you can get an overview here. That's where you find if a company has beat the estimate or missed the estimate. It's under the forecast tab for every stock. I'm not sure if that's what you're looking for. Yeah, but maybe you're looking for a screener that can screen those who beat next the previous quarter. I don't think we have that already, but I think it's a good idea. But I think it can be a good idea for estimate. For screening, and we'll take a note on that. Okay. Currently, do insider as a group sell in advance in a market job, so they are sitting on dry powder? I think as a chart I showed you, I showed the insider trend chart. In general, if we switch to this sell-buy ratio, in general, as a group, they do sell more when the market valuation is high. You can see this here. They do sell more before the crash, and maybe not on individual basis, but as a group they do. And also the insiders are usually they are high earners. Their salary compensation are usually high, so they may have more money during the downturns. Okay, and Choba is asking insider take action before the yeah. Adam, I'm interested in looking at stocks that are below the lowest analyst price forecast tab. Is there a way to screen that in all-in-one screener? I don't think we have that now, but I think it's a good idea. So for every stock, we know that Adam is talking about that under the forecast tab here, we can see that because for every stock, for not every stock, for a lot of stock, most of stock, website is kind of reacting a bit slow now. The server. For lots of stock, there are lots of analysts that follow a company, and when they follow, they will have a price target. Some are higher price target, some are lower. And Adam is asking for a screener which can screen for even the lowest, relative the lowest target, which is below that. I think it's a good suggestion. Also, not sure why the server is not the website is kind of slow at this point. And yeah, let me talk to let my developers know. Yeah, if you look at this page, we should have a chart here, which shows the speed of the shows the target, which shows the target of the target of the companies that the insiders gave, and in that case, you will be able to know the yeah, here this chart. You can see that there's low target, there's high target, and in this way, yeah, what I believe that Adam's trying to do is to figure out which. Oh, I'm sorry. Yeah. Sorry, I missed some. Yeah, even below the price, the price is even below the current price. Yeah, that's why that's what you're looking for. I think it's a good idea. James, can you take a note on that? So note on this, and so that we can we will be able to add that Warren, okay, Warren, can you discuss formula of importance of reverse DCF? Yeah, reverse DCF, yes. The reverse DCF, for every stock, we have a DCF type. If you look at here, the DCF type, and on this side of DCF type, we have the DCF. On this side, it's the reverse DCF model. I'm looking at the company Brown & Brown, which I own, and for the DCF and the reverse DCF, there are lots of assumptions. The assumptions, for example, the discount rate, what discount rate you're using. And we default to the current 10-year Treasury rate plus 6%. We default, that's what we default to. So that's why it's 11% now, the discount rate. And then there's also the growth stage and the terminal stage. So how long you have an assumption for the growth rate for each of these and the length of each stage lasts. By default, also the earnings per share we use as a default as an input to estimate future earnings. So our DCF model is actually by default it's earning per share model. Of course, if you like free cash flow, we have options here. Can do that. You also we have the adjust dividend model. But I personally like this earning per share model, and with Brown seems like it's saying that the stock is fair valued in DCF model, and then the reverse DCF model, you can see that we give here. We expect the earning per share will be 19.48%. So the reverse DCF model is trying to justify the current stock price. And to justify the current stock price and what kind of growth we need to justify the current stock price. So with Brown & Brown, we found that with all these assumptions, the future growth needs to be 19.48% per year in the next 10 years, average. And we found that the earning per share average for Brown & Brown was 22.2% over the last 10 years. So the expected growth is smaller than the past growth. So that's why we think it's most likely it can be achieved. So that's why we said it can be achieved. It's achievable, but it is based on a lot of assumptions. Assumptions, first of all, the business has to be predictable and consistent in the future. And second is that the future growth is similar to the past growth. And the discount rate, if you change it a little bit, it will affect the valuation dramatically. So it depends on future interest rate, which we don't know. It's also assumption. Future growth stage, we don't know. How long it will last, we don't know. So the DCF model, both DCF model and the reverse DCF model have lots of assumptions, and that's what you need to be aware. And I personally actually don't like DCF model, but it's very popular and it makes sense. The theory makes a lot of sense because you're discounting future cash flow into current and look at the value. Yeah, the idea makes lots of sense, the concept, but just like the assumptions, there are too many assumptions. That's my personal opinion. And in terms of valuation, we have so many valuation models, like the GF model, DCF, DCF earnings, DCF free cash flow, Peter Lynch model. We have lots of models. I personally like our GF value model the most. And I've been doing this for 20 years, and I believe that our GF model is the best, I believe. Because the GF model is basically we observe the correlation of stock prices over the last 5 years. The correlations between the stock prices with the revenue, with earnings, with cash flow, with book value, lots of things. Well, then we found the one which has the closest correlation with the stock price. And then we use that as to calculate the fair multiple and also consider future growth to estimate the current valuation. So in case of Brown, it's modestly overvalued. It's maybe 20% overvalued in this case, and it gives a different conclusion from the DCF value. But I personally believe that the GF value is better, is more secure. Yes, I made in the DCF model, the growth rate is the earnings average earning growth model. No, EBITDA growth rate. It's the EBITDA growth rate. If we come here, I think we explained somewhere the growth rate here. Okay, let me see. The number of years growth rate and average annual the default value growth. Oh, okay, I'm sorry. It's average EPS without NI growth rate. That's what we use. Yeah, I'm sorry. That's if you look at here, it's explained here. It's the EPS growth rate. I was wrong. Okay, let me look at other questions. Do you have sentiment for stocks besides momentum run? No, we don't. Bill is asking AI function on the website. Okay, AI function. We have AI function here. For every button here, you can see that we have an AI. Here you can ask questions of any stock. And if you like, for example, now I'm under Brown, so you can ask questions about Brown. Let's see, what is the fair value for Brown and Brown? Let's see how it answers. So that it. The backend of this GuruAI is actually the open AI. It's open AI, but we do add our own data there. So which is estimated to be $90. The value described from JF value. Basically, it's talking about JF value. And what is the future growth? Future revenue growth. Let's see how does it answer. Yeah, it's an open AI, but we do add our own information there, our own data there to make it more better for AI. Okay, future revenue growth for Brown project to be 8.5. So that's so you can ask all the questions. You can it's based on OpenAI algorithm and GuruFox data. That's what we use. We also try to use it for lots of other purposes. And for valuation, and we also use it actually for customer service here. If you need support and you ask questions here, chat with us. The first step you'll be chatting with AI, and it can answer more than 95% of questions, because every question you ask was already asked, most likely already asked by someone else before, and we have answered, and AI will learn from what we answered before and answer to you. But if it does not work, can always request to chat with our agent. We are a real person here. That's what we use for AI, and we also, yeah, I think those are the main purpose what we were doing. Okay, let me look at answers. Can you add EBITDA margin calculation to predict profitability rank? Okay, basically you're talking about to EBITDA margin here. Yeah, I think we can. I think we can. Yeah, please send a ticket for that. We so that we don't forget. Warren, you're welcome. Is there any backtesting possibility with GF value? I believe so. You can come to here, and then for GF value, we have a lot of valuation GF value. Yeah, price GF value and price. We have a price GF value. If you want to do backtesting, yeah, that's what you need. You need to do a price to GF value. For example here. Then you can try to do backtesting with backtesting here and rank by price to GF value. Yeah, let's try it. Let's try it. Yeah, you can do that with price GF value rank backtesting. And I didn't add any other parameters here, but maybe you want to add other parameters to do the backtesting here. And but that's what yeah, should be able to do it. And for instance, if I just limit to SP 500 companies, if I limit to SP 500 companies, now let's try the backtesting again. Then you will you get a more sensible answer. Yeah, this is yeah, I just randomly use that GF value backtesting for last 3 years from 2022 to 2020 to current. And you can see that it's actually, I think they outperformed the market already from this backtesting. Yeah, you can play with it. It does support the backtesting. Okay. How do you estimate future growth in GF value model? It's based on the future growth is certainly not 10 years. It's actually based on the forecast value or forecast revenue or earnings we have here. It's consistent with here the analyst. It's based on analyst forecast, and you're up to 3 years. I believe it's not it will not be 10 years. No one can predict a company for 10 years. Okay. Yeah, Michael, to get AI, just the right-hand corner here, the right-hand corner here, we have a few icons here. One of it is AI, and you just click on that, you will be able to do it. You just click on that window, GuruAI window will open, and you will be able to do it there. Okay. Any questions? Any more questions? Yeah, feel free to ask me. I will certainly do my best to answer your questions. And if there's no questions, I will continue. I will talk more about what we are adding. We are working on the website all the time, and we have a big team of developers and data analysts working on the website. And all the time, we always try to make it richer, the more data rich, adding more data. One data we're adding actually is the moat. And moat is a moat, and it will be for every stock we are adding a moat rank. We'll also add another rank which called tariff resilience rank. And we know that the tariff has become a hot word these days, and some companies are impacted more, and some are not that much impacted. So that's why we add a tariff resilience rank. And we are adding those. So they will be released pretty soon. It will also be available for filtering. Okay. Yeah, let me look at the valuation. Okay, Print Leaks is asking about valuation. Let's take a look at valuation again. I talked about the S&P 500 valuation here. The GF value for S&P 500 is here, and see that it says fair valued, but if we extend the chart, is actually above the fair value line by maybe 10%. Yeah, 10%. So it's still fair value, but it's actually slightly overvalued. And we have similar chart for the Nasdaq. So look at here. Yeah, Nasdaq is more overvalued. Nasdaq is got impact more by the tariff, and there are lots of I believe there are lots of adjustments with to the earnings and revenue lately for the Nasdaq companies. This is Dow 30 stocks. Dow is actually more fair valued than Nasdaq and than the S&P 500 because Dow companies are more traditional and the valuation is not that high. That's what we have. We don't have. Anthony asking is a global market ETF valuation individual countries. What we have is actually for global ETF. We don't have global market ETF, but we do have for global market. We have a page called Global Market Overview, which shows the global market valuation. And you can see that we divide it into global market valuation of developed countries and emerging markets. So they give very different possible future returns. Of course, they carry different risks too. The Turkey market seems to be the most promising currently among the emerging markets. Among the developed markets, in Australia and Singapore are doing better. Other areas are mostly positioned for lower returns in the future. That's what we have. We don't have any others related to the global market ETF. Okay, let me look at other questions. Anthony, my question on cash equivalent value of Berkshire. Can this be translated into cash per Class A Class C shares? Yeah. Of course you can. And let's come to Berkshire. Berkshire is a very special company. Warren Buffett is retiring because of the news. The stock came down some, but Warren Buffett was managing Berkshire Hathaway for 60 years, and the stock went up 5 million%. Oh, that's amazing, 5 million%. And what Anthony is asking is regarding to cash. If you come to our all-in-one, our 30-year financial page for every stock, we have an item called cash per share, which is the cash that the company has. The company has and divided by the number of the shares outstanding. So the Class B shares now traded at $517 per share, and the cash per share is actually $20, about $20 for Berkshire Hathaway. This is as of March 2025. That's what we calculated. So it's I believe this is if you want to know how it's calculated, you just come to here, click on that, and it says cash per share. It's calculated as balance sheet cash and cash equivalent divided by the shares outstanding. So in Berkshire B shares case, we can see that here we have calculation. Balance sheet cash per share. So balance sheet cash per share and cash equivalent is 42 billion. So it says it's only 42 billion. So let's see the balance sheet. Yeah, it's because it's only calculating the cash and not considering the short-term investment. So that's why it's lower than what we expect in Berkshire's case. But if you want to include those, you can always do the calculation yourself to cash use cash per share, cash or cash equivalent, including short-term investment per share, and to divide by the shares outstanding. I will estimate for Berkshire because the market cap is about 1.3 billion, 1.3 trillion, 1.1 trillion market cap, and Berkshire has about 1/3 of that in cash. So it's probably you can estimate that it's about 1/3 in cash. I think I think we should be able to add something here, cash per share to become to we can add an item which can include short-term investments, all those, and to make it more close to the real number. Okay. Item question. I love GF valuation chart. Do you have a chart for ETF in one of your membership? For ETFs in one of your membership? No, we don't have actually. We were talking about adding this, and I think we should be able to add that. Let me write it down so that we can add it. Let me write it down. GF value for ETF and cash. Okay. Warren, how the split Berkshire B and A calculation in their market cap? Of course, we know that Berkshire A and B. If you look at the number of shares outstanding for Berkshire B, for example, the number of shares outstanding for Berkshire B, for example, we see here it says 2.15, the current 2.157 million. This is actually more than 2 billion shares. It's actually it's an equivalent share. It converts all the shares of Class A to B in this calculation. So it's converted share numbers already. It's not really the shares that's available. It converts all the A shares to the B shares. I think one A share is 1,500, and that for both market cap and all the per share numbers. So only by doing this, we can get a correct number. And that's okay for the financials. Again, if Berkshire Hathaway A share, we can look at the shares outstanding and can look at share outstanding. It says for A share, it has only 1.4 million shares based on the Berkshire Hathaway annual report here. So A share is only 1.4 million shares. Again, when we calculate this, it converts all the B shares into A share for the calculation. So to make sure that everything is right. Okay, Anthony, yes, I think we will add a item which includes all the cash and short-term investments, all of this. And I think similar problem with Apple. I think similar case with Apple. With Apple, we know that it has lots of cash, but it's not reflected in the cash per share. The reason is because it put it somewhere else. It put it, I think, balance sheet, short-term investment. Yeah, it put long-term debt and capital. It put it in somewhere else. Long-term effect. No, this current. So, yeah, we'll study it later. We'll study it offline, and I think a few companies have this kind of big problem. The company has a lot of cash, may have this kind of problems. Okay, Anthony continue to ask. Tesla seems to be very low. Does the program can intrinsic value give the variable things like involved? Tesla, no, we don't. We don't calculate. Yeah, Tesla, of course, we know that Tesla might be doing lots of things, the robotics, FSD. If you look at the business breakdown, we do have a chart which shows the business breakdown. The revenue, yeah, this is the business breakdown. The revenue just actually mainly two parts. One is a car, the other is a solar panel. And of course, it does lots of other things. Maybe it has a bright future, but they're not producing. They're not producing the revenue needed anymore. Not yet. They're not producing the revenue yet. So that's why we don't include them into the calculation. And maybe once they start produce revenue, we may. Yeah. Okay. Google has a bad news today. Apple saying that they will not. They'll integrate AI search into their Safari system inside of Google search. So that's a bad news for Google. So Google is down 8% today. Yeah, Google, I think it seems to be undervalued. I believe that it is undervalued. But among all the significant seven, Google does face quite some risk with their main business, with their search business, because AI is changing people how people find information online, and it does. We are not searching as much as we were used to be. Although when we search, Google mostly give us an AI answer, but we're not clicking as many pages as we used to do, and that's not good for Google. That's unfortunately the technology advances, and some company will benefit from it, and some company will get hurt. Google is certainly facing a challenge here. Yeah, I personally own Google for many years already. The company was doing really well, but I do have some doubt with the future of the business. That's where I am with the stock. Among the significant seven, last time someone asked me which one do I think that has the widest moat. I think Microsoft. I personally I think that Microsoft has the widest moat. Microsoft did do really well last week when the earning was released, and it had a positive surprise. So that's why the stock went up quite a bit. It was undervalued, and now the stock is not undervalued anymore. It's about fair value, I think, or slightly overvalued. If I look at our GF value chart, which is a chart I use, it's now more fair valued, so it's not undervalued anymore. And I think that it has the widest moat among all the significant seven. And Microsoft was, I believe, it's now the largest company with the largest market cap. It was the second one 20 some years ago. It was the second largest company market cap. And all the other companies have been changing the least, but Microsoft is always there. It is now the company with the largest market cap, 3.2 trillion, and the next one's Apple, 2.9 trillion. NVDA, Google, Meta, Berkshire Hathaway, and Broadcom. Those are companies with the largest market cap. Among those, which one I love the most? I think it's Microsoft. And the next one is maybe Berkshire Hathaway. I own both. I own both in large positions. That's where I am. Feel free to ask me any questions if you have, and otherwise I will show you more about our summary page. Our summary page, I think there's so much information there. And first of all, if you don't know, this page can be customized. You can rearrange it in a way that you like. Although I personally like our default way. We are adding, as I said, we're adding the Moat rank and the Tariff resilience rank. It will be added here. With Microsoft, it's a company with one of the widest moat here. Valuation reasonable. The business breakdown, of the business. It's called business breakdown here. If you scroll down here, how Microsoft makes this money. It's cloud and productivity, business process, and personal computing. Personal computing is the one we're using. Windows and Office, Copilot, productivity, and the business process, the AI part and the cloud part. Can I add the average? North is asking, can I add the average price target to the summary tab? You will have a place where you can add the valuation. Add your own valuation, at least we have. Seems like we're not supporting it, but you can write notes here. You can write notes about Microsoft here, and that you can use. It will be displayed. It will be displayed, and you can update the notes in the future so that you will know that what you were thinking over time for stock. It's called my notes here. You can write a note here. I think adding a personal price target. We have a fair value add. We have a place. Okay. You can vote it. Yes, you can vote it. Yeah, you can vote it. I remember we had, but maybe we removed it at some point in time. Okay. James asking, when building your Moat study, are you going to include Moat durability, stability to attack? Yeah, we of course will consider the Moat factors, the Moat factors such as the network effect, the switching cost, and all of those. Those are the considerations for the Moat ranks. Yeah, of course. It's a moat. It has to consider all this durability and the competition and all others. For the stock, North was asking if we can add a price target. I think we should support that of like more a fair value. Currently, you can do that in portfolios. If you build a portfolio, if you set up a portfolio, you can add your own fair value there. It's more like a price target. You can add your own fair value for every stock, and in this way, it's more act like a fair value, a price target for yourself. If it does not display here, you can edit the view Edit view, I think once you click on that edit view, search for fair value. Yeah, fair value. I think if you put it up for here, save it, and you will be able to fair value. Yeah, fair value. It's one of the columns here. You can add your own fair value here, for instance. Then you can save it. For example, Adobe, I just randomly run a number here, save, and it'll be saved. And in principle, we should display that into display that into the Adobe page also, so that you will know your fair value. Okay, yeah, we have to say that we have been working on this for 20 years, and we keep adding new things. Actually, things like this we make us add new things. We're always open to suggestions and modification. We're always open to that suggestions. And if you think anything that will make the website easier to use for yourself, let us know, and we will always do our best to meet your request. Okay, I think NVIDIA seems to be a leader in their space, and pick, brick, and shovel company. Can you compare it with competitors from a value perspective? Yeah, I think it's hard for, if without reading the report, without understanding the business, it's hard just to analyze the company in such a fast-changing field. Just looking at the numbers, just by looking at the numbers. So you do need to understand the business, the product. It's hard. Why NVIDIA is better than AMD? It's hard to answer. Yeah, we all know that NVIDIA has been doing much better than AMD. But will be the case next 5 years, 10 years? It's hard to predict for this kind of technology companies. So many factors. Most likely, yes, but we don't know for sure. Okay, I think that's what I have. Seems like we don't get lots of questions today. That's what I have. Thank you all very much for coming, and we'll see you next month. The next month, always the same time, the Wednesday, the first Wednesday of each month. First Wednesday, so it'll be June 4th, next meeting, 1 p.m. Central Time, June 4th. Thank you all very much, and see you next month.